All right, good evening, traders. We are tonight on the 21st of December, Wednesday evening, just 5 minutes past 9 p.m. And I think before we take a look at the Nifty, Bank Nifty, and few stocks, let's quickly take a look at what's happening globally. Now, surprise, Dow Jones and S&P 500 has opened with a gap up and extending the move on the upside with some decent momentum. Not bad, not bad because the market slipped for 5 consecutive days, took a day off, kind of a halt, and now bouncing back. Will this be a dead cat bounce, just like what we saw in our markets? I think that clarity we can only get tomorrow. But this move can extend further up towards its previous support, which is close to that 33,600. So this momentum that Dow Jones and S&P 500 is picking up has some headroom for it to go a little bit further up, which should support our markets tomorrow, at least in the open. We can see the SGX is trading 52 points positive, tad above that 18,300 mark. But within this particular watch list that I have on the right hand side of my trading view screen, the most interesting, important one I feel is that of crude. I think that I've been talking about crude a couple of times in the past because what I see is a much needed multi-legged move on the upside. Since its top, every time the index had bounced back, it has been just one-legged. And with today's move already up 2%, it is inching above its previous fractal high, which means that we are headed for ABC or 1, 2, 3 kind of a move. Weekly charts are nothing great. Weekly charts are just suggesting some kind of a bear market bounce back, a downtrending market which is giving a bounce back, nothing more than that. But it's the daily chart which is picking up nice momentum. It's the daily chart which is reversing the trend. And if this continues, then we can look at further upsides. If I quickly take the liberty and drop a Fibonacci projection, then where is the 2? Yes. So we can work with levels, and let me lock this. So we can work with levels like 79.84, very close to 80, and then 82.5, which aligns close to its previous swing high. So not bad. I think this asset class is picking up a bit of momentum to open up further upsides. Now let's go back to our markets and what happened. First, let's take a look at the Nifty. What do I see? I see number one, range expansion. The high-low range of the market, my range indicators are clearly suggesting that a lot of price movement is happening almost every day. So number one is a range expansion. Number two, it's an outside bar. It's a higher high and a lower low on a day-to-day basis. And the interesting point is not the higher high, because the higher high was made at the morning when the market kind of opened well, could not sustain, and beautifully showed us that 18,500, 520, well-defined resistance, previous supports. Last time I corrected from here. This time also I'm correcting from here. So it's just like a nice copybook kind of a move after opening well, but then it slipped. But the interesting part, after it slipped, and I think for this I need to take you from a 75-minute time frame down to let's say a 15-minute time frame. And the reason of this is this was yesterday's low, this particular line. And I think I'll only do justice if I drop in a horizontal line right at this low. And you'll notice that today it just breached it like for just few seconds or minutes, and then immediately bounced back and then kind of cooled off. These are classic signs of traps wherein stop loss gets hit and it immediately reverses in the opposite direction. And that's exactly what happened intraday towards the close, towards the last hour or so of today's trades for the Nifty. So I think going forward for any kind of weakness, if you take a look at my daily charts, we are working with targets of around 18,130, 18,100 and further lower levels. These will definitely open up if today's low is gone. chances are there because closing price is not far away from the low. But just in case, these kind of markets, it's very difficult to predict what's happened. But just in case, if we see the index bouncing back tomorrow, and at least the 50% mark, at least the 50% of the body would mean 18,000. Let's work with this high. Let's work with this high on the 15-minute time frame. This high is more or less, if you can see my cursor, is more or less close to the 15% mark. So if we have a close above 18,350, 360 tomorrow without breaking today's low, if it opens somewhere here, stays and goes up, does not break today's low, this does not happen, and if we have a close somewhere here or above in this area, then it's a good sign. Then you should not be sitting on shorts casually. So let's keep this in mind for the upside. So upside level is around 18,350, 360, and downside, of course, slip below today's low, and we have these levels pointed out. I think I should also quickly drop in a retracement here. As I discuss the markets with you, I would like to first lock it and bring in the retracement levels. 1 minute. I think I selected the other one. Yes, this is more like it. And yes, 38.2, 50, 61, 76, 78.6. And what do we have here? We have a decent confluence, more or less, not exactly a confluence, 200 and 130, it's a 70-point difference, but not bad. 200 is not bad. Close to previous lows, at previous highs. So 18,200 is not a bad level. 18K, 17,900 is a very nice level. It's a very nice level if this correction continues, because it means that a psychological round number will get compromised and then we may get a bounce back. It has got a gap also to support it. So yes, we can work with 18,100, 18,200 zone and then sub 18K. Mine means very marginally sub 18K, 17,900. Chali. So these are the views about the Nifty in terms of a trading strategy. Bias, of course, is on the downside, but you should be careful, especially considering the fact that volatility has increased. We discussed this in our last night's video. Bank Nifty seems like doing a catch-up game. You'll remember that when we were talking about the market a couple of days back, I mentioned the fact that Bank Nifty has only corrected one leg, whereas Nifty has already corrected for multiple legs. Well, here I am. The catch-up from the Bank Nifty is happening, and it was a sharp sell-off today thanks to SBI that the stock sold off, the index sold off, did bounce back, and I have a nice confluence here as well. If we take a look at the levels, the first target anyways is met. The next level is coming close to that 42K, 42,200 zone. It's a decent confluence. In fact, 41,500, 41,400 is also a good confluence. I'm just sharing the levels. It does not mean that these levels will come, may or may not, but we've got the work done. Now, when it comes to the bounce back, if we see a bounce back, then the first would be close to that, a little above that 43,000. And then this zone. This is not going to be easy. I think 43K all the way towards 43,500. This area is where the index will find some decent resistance. All eyes on SBI, because SBI was one stock, especially also alongside ICICI Bank. Axis Bank is probably one of the strongest counter in this pack. It has created a beautiful engulfing. If you want to take a quick look at it, you'll see a beautiful engulfing over here on the daily time frame. Momentum, of course, is slowing down, but one of the strongest stock. I would not want to short this, but yes, I don't mind looking at shorting opportunities in SBI, or for that matter ICICI Bank as well as HDFC Bank. Now, with this kind of a expanded market, and when I say expanded, I mean in terms of the range, it's very difficult actually to pinpoint levels, because generally after these kind of expansions, the market takes a breather and slows down, makes a trader's life difficult because he won't get the movement. Talking about movement, I feel you should keep an eye on this large cap IT stock at least tomorrow, Infosys. Now, what is it that catches my attention? Number one, it's gone through a pretty decent correction. We have an almost 12% correction on Infosys, which is a healthy correction. Larger time frame, still in an uptrend. It's just holding itself well so that it doesn't fall, and this is the short-term correction it is going through. It is not an island reversal. It is not a morning star, but it's got a little hint of such a behavior. When the trend is down, the momentum is weak. The short-term momentum is just picking up. Range is getting contracted. I have a decoy bar, and I feel that there is a chance. If you just look at today's candlestick, I think that there is a chance of an upside tomorrow or tomorrow and day after tomorrow. A short-term 1, 2, 3 day kind of a bounce back opportunity. Today's bar, today's price action has created this opportunity. Whether it will go above today's high and go towards that 1550, 1560 zone or not needs to be seen. I would say my experience is suggesting it is possible. This is possible. And my experience also suggests that when the markets are spooked and there is a strong downtrend, no such theories work. And so if it slips below today's low, it can definitely open up further down towards 1480, 70, even 1460. So not exactly make or break because it has already broken. This was exactly a make or break, which has clearly broken. But after breaking down, after almost a 12% corrective move, it has just created a window of opportunity of a short-term bounce back. If it comes, it will be good for the Nifty, provided the other sectors do not outweigh the Nifty on the downside. But keep an eye on Infosys, and tomorrow evening when I share my market views, I'll quickly take a look at it and see whether it delivered or not. Right? All right then, take care of yourselves, trade well and trade wise.